All right, guys, it is 3 p.m. So I think we can go right ahead and get started. I am going to go ahead and record. So let me just get everything. Oh, shoot, I already did click it on. So let me just go ahead and make sure that we can see everything. Can you guys see the chart in front of you? If you can see the chart, just drop a number 1 in the chat. Just drop a 1 in the chat if you're seeing the chart clearly. All right, let's check here. Okay. Awesome. All right. Okay, actually, you know what? Let's go ahead and put that on. All right. So again, just wanna welcome you guys to this nuts and bolts session. The whole purpose of this call really was, I had a number of persons that were asking me to do a training on on using the MT4, the MetaTrader 4, that is. So if you're a newbie right now, if you're someone who's very new to Forex, and you have that interest in learning how to trade, what to look at, what to look for, this is going to be a session where I'll try to cover as much as possible. All right, in terms of the basics that you want to know, the basics you want to understand, things like terminologies and such like. I won't go deep into that because that is something that I would rather that you can read upon that. There's a ton of information out there that you can read up and get terminologies and what's not. The main ones, the basic ones, I will explain where needed. But just so everyone understands, this is not an in-depth training, strategies and so on. This is pretty much the basics training. I will give you guys, as we go on, probably 1 or 2 different strategies that you can use towards your advantage. Very simple things. I know there's a ton of different strategies out there that persons incorporate. There's hundreds of strategies. I prefer to keep things very simple, very basic. All right. The whole idea really is to give you a very uncomplicated method of being able to get into the market and start to understand what to look for, what to do, and what not to do as well, and be able to make some money. All right. So everybody's good to go. Oh, by the way, guys, if you have any questions, definitely this will be the place to hit me with them. I'll try my best to answer as much questions as possible. So as I'm going on, if you do have a question, you can drop it in the chat. I'll try to keep that box open. I'll probably just minimize this and I'll open up this. So yeah, I'll just try to keep my eye on the chat box so that if you have any questions, I can respond to those easily and quickly for you. All right. Okay. So let me start this way. Couple things that I'm looking to focus on today. All right. So we're gonna look at chart setup and layout, how to set your chart up, get your your layout correct, your background, and that kind of thing. Like I said, for those of you who may be a bit more advanced, don't be like, oh well, I already know this. Well, again, I did say from the beginning, this is a basics training. Okay. So chart setup and layout, we're gonna look at things like support and resistance, being able to identify that and what really it means. We're gonna look a little bit at trend line trading and how you can use that to your advantage. Breakout trading as well. I'll even give you a little bit of EMA strategies, right? I primarily trade based off EMAs. I like EMAs and I like price action, all right? But my primary training has been EMAs. I love EMAs. Like my mentor always said, EMAs never lie. They don't lie. So there's that. We're gonna look a bit at market structure. We're gonna look at top-down analysis, something that I know a lot of persons have a lot of problems with, understanding how to look at one time frame and compare it to another time frame and be able to be able to tell what's going to happen or what's likely to happen in the market, even though 2 different time frames maybe tell you 2 different things. All right, so we're going to look at that. We're going to look at marking out your zones and some different ways that you can possibly do that for zone trading. And I just thought, even though this might be kind of intermediate, I thought I'd throw this in as well because I do get people asking me about it. Fibonacci, all right? How to actually use Fibonacci and what's the purpose of Fibonacci and all that kind of stuff. If there's anything else that you guys would like me to touch on within the next hour or so, yeah, hour and a half, maybe. All right. Please let me know. I'll just make a note of it. and I'll try my best to touch on that as well. All right. So don't just be a spectator. Try to be involved as much as possible. And if you want to use your mic, you want to, explain something or ask a question, you're welcome to do that as well. Okay. So let's start with the absolute ground floor, and I'll start here because I do have persons that have asked me, like, okay, I've set up the broker, I have it, I have no clue what to do next. Okay, so let's start at the absolute beginning. So this is basically what you call your MetaTrader platform, or most persons you would just use the terminology MT4. There's also MT5. It's quite similar to MT4. Not that much differences. Some say it's more advanced. It does allow for more trading of CFDs, and allows for more trading of different kinds of currencies and pairs that you wouldn't see available on MT4. So there's that. But outside of that, if you're just trading the basic Forex pairs, then they're pretty much the same. I have clients that I work with that some use MT4, some use MT5. It really doesn't matter it doesn't really matter too much. Okay, so let's look first of all at the setting up of your chart. Okay, so one of the first things you want to do, your chart may kind of look like well, actually, let's do this. Let me just kind of set it back. Let me just set it back, just hit reset. All right. So when you first open your chart, it may look like this. You may actually see 4 windows. All right. So this whole screen will be split into 4 different sections. And what you can do basically, unless you're looking to trade multiple things at the same time, and if you're a newbie, you're probably not, you can just click the little X and just kind of exit them off. And that will just give you one chart to focus on. So we're going to look at this one chart. And most of what we're going to do, I really don't need to go to much other pairs. We can work with this one chart, okay? So this is your chart with the basic grid, default colors and everything on your chart. One of the first things you want to do is you want to set your, create your chart layout, how you want it to look. Now, what you want to do, you want to right click. So you take your mouse, you right click, and you come down to properties. Now, let me say this as well. Obviously, things are going to look a bit differently on your cell phone. All right. I'll probably do a different training on that in terms of navigating the cell phone. But I think I already have a video that pretty much goes through all of that. So maybe I will, maybe I won't. But this is primarily, things you look for on a desktop, computer, laptop, and so on. So you right click, you come down to properties, and you're going to see this come up. All right. After you see this, now you get to choose the background that you want, the foreground you want. You can choose whether you want the grid or if you don't want it. Me personally, I don't like the grid. I take it off. So I just click on none, removes that, give me a nice clean background. Some people prefer to have a white background, all right, with probably, blue and red, right? In terms of buy candles and sell candles. I like to go traditional. My foreground is white so that I can see the grid numbers, the levels, and so on, the price. Bar up, I just go with lime. I like lime. All right. Bar up, lime. Bar down, I just put that as red. All right. Bull candles, just like bar up, I put that as lime as well. And bear candles, again, I just go with red. Just keep it simple. Line graph, I keep mine as lime. Volumes, lime green, doesn't matter. And my background, I like a black background. All right. Black looks good with everything. I don't like the white. So, boom. Done. All right. Now, once you've done this, here's the thing. When you go to a new pair, so this is Euro USD that we're on. That basically means that we're trading the Euro dollar against the US dollar. Okay. So, for those new ones, in a nutshell, what that is saying is if Euro USD is what we're trading, Euro being the first out of the abbreviation here, EUR, it means that Euro is the base currency. All right, that's the leading currency, the base currency. Therefore, if price is moving upwards in what we call a bullish momentum, all right, what that means is that when you see all of these green candles here, it means that at that particular point in time, the euro was stronger than the US dollar. Where you see the red candles all through the chart, it means that at those specific places in time, the US dollar was actually, the US dollar was actually stronger than the euro. And obviously, inversely, it means at that point, the euro was weaker than the US dollar. Okay? Does everybody get that? So is it going up? Green candles, it means the euro's in charge. When it's coming down at these points, different sections here, it means the euro was losing strength and the US dollar was taking over in strength, okay? So that's what we refer to when we talk about a pair. You're actually putting two currencies or pairing two currencies against each other. And your focus as a Forex trader is to try to ascertain when a particular currency is stronger, all right, or weaker than the other. And once you know which is going to be stronger or which is more likely to be stronger than the other, then it gives you a better understanding of when you should buy it or when you should sell it. Your whole focus as a Forex trader is to understand the when. The what is not really as important, all right? If you understand what you're doing, you can make money on pretty much every currency, any currency, all right? You can make money on anything. But the real key is understanding when to get into that particular order. And of course, it's important to understand when to get out, but knowing when to get in, I think, is a bit more important than actually just knowing when to get out. Because if you get in and it's going in your way, then, you know, you make some profit and you may not see it immediately, but you can hop out at any point in time. All right. But if you enter the wrong time, you can kind of mess yourself up in a very, very, very big way. All right. So there's that. Let's look at some more things. So we've adjusted the layout. What you want to do after you've done that, this little tab up here, this little button. If you guys can see my mouse, I hope you can. All right. If you can't see my mouse, this little button right here, you click on that and then you click on Save Template. All right. Save template. Now, once you save that template, what it does, it saves this particular layout with the black background and everything as you have set it as it is. So instead now of you open up a new pair and it looking like whatever, all right, some kind of default setting, you just go now to the pair that you would have saved and it looks like this. I've actually saved this as blank chart. So if I've got, you know, one of my strategies or whatever, and then I just want to go back to a blank chart, I just come up here, see that blank chart, and it switches it right back. And every time I open a particular currency, I can just do that, click on blank chart, and it gives me that setting, okay? So that you don't have to keep doing it every single time that you want to open an order, all right? So let's look at how to actually before we do that, let's kind of look at some more settings up here, some more of the tabs. So you know how to save your chart layout. Also, you have the time frames, okay? You see where it says M1, M5, M15, all the way up to MN. So basically, these are represent different time frames that you have access to. Every single candle on this chart here represents a time slot. Right now, I'm on the 15-minute. M15 means every single candle represents 15 minutes of time, okay? So obviously, if you count this 15, 30, 45, 60, this is 1 hour right here. All right. So you can count how much ever it makes up to a full day if you want. But every single candle here is represented by a 15-minute slot. If I were to change it to the 1 minute, it means that every single candle here represents 1 single minute of time that has passed. If I change it to the H1, that's 1 hour. The H4, that's 4 hours. Now, one of the main principles that is understood in trading Forex is that the bigger time frames always win. Okay. Now, when I get into top-down analysis, I'll talk about that a bit more. I won't really get into that right now, but just understand that the bigger the time frame, the better visual you have of what is expected to happen potentially within the market, because everything is about probabilities in trading. All right. There's no guarantees of anything. There are different factors that can cause price to go up or price to go down without much warning. It just happens. If there was no warning, then you would have some persons who win 100% of trades, and nobody wins 100% of trades. You can win 90-something% of your trades, but nobody wins all 100% of their trades because shit just happens sometimes. All right, that is out of your control. So bear that in mind. Let's look a little further now. Another thing you want to do as well, you want to pay attention to, is these little buttons here. Zoom in and zoom out. May not seem like a really important thing that I want to pay attention to, but I'll tell you this, they're really, really important. You could lose a lot of trades just because you don't like to zoom out. Why do you want to learn to use the zoom out button a lot more? Because when you zoom out, it gives you a much better visual of what would have happened already in the past in terms of price. And, you know, then it gives you a better idea then of what will potentially happen in the future. Okay. Very, very, very important. I've literally seen some folks trading and they just want to see the big bright colors on the screen. They're like this. I'm like, what are you doing? Right? You don't want to do that, guys. You want to give yourself a chance to see, right? To see more of what is actually happening in the market. So you want to learn to use this zoom out button a whole lot more because it will definitely save you from making a lot of mistakes, okay? Now, a couple other things. When you open your account for the first time, you're going to see this section here, the terminal, and you will see your balance. Now, obviously, this is a demo account that I'm using for this training, right? You will see your balance down here. You'll see your equity and your free margin. Now, let me explain very quickly. You want to pay a lot more attention to your equity than you do to your balance. And the reason for that is your equity tells you what your true balance will be if you were to close the particular order right at that point. So let me give an example. Let's say that you had $1,000 in your account and you had a trade or some trades open and they're in profit by $500 in total, right? It would mean your equity would be showing as $1,500, which is basically saying right now your balance is 1,000, but at this point in time, if you close these trades off, it will take that profit and add it to your balance. So this is the amount you would have. Now, inversely, if you were down in negative by $500, what it basically is saying is, oh, let me go ahead and mute. Give me 1 second, guys. Let me go ahead and mute the chat. Oh, and I'm not seeing. Oh, there we go. Give me 1 second. Okay, so I'm just going to go ahead and mute everyone. So if you want to ask a question throughout, just raise your hand. I'll see that pop up, and then we can go from there. All right. Okay, so here we go. So if you're down by $500, basically your equity would show, instead of 1,000, it will show $500. Your balance would be 1,000, but your equity would be 500. What that means, and again, is if you were to close this trade right now, this is what your true balance would be. So you really want to pay attention to your equity, and of course, you want to pay attention to your margin. All right. And when you open a trade, you'll see margin percentage. My advice: try not to ever let that fall below 100%. Some brokers allow you to go to 90%, well, 90%. Some allow you at 75%. Some 50%. Some 35%. All right, before they give you a margin call. Basically, what that means is the broker is saying, you know what, buddy, you're not doing too good. So to protect you and to protect us as the broker as well, what we're going to do is we're going to close this trade off automatically. Now, you might be like, no, this trade is going to go back into profit. Well, it might, but you see, no, right, it might. But because that you are so far in loss, your margin percentage has decreased so much. What the broker is saying is, no, we're going to close this off, protect you from losing everything, because you obviously don't know what you're doing, and we're going to protect ourselves as well. All right, and they stop you out, and they close off the biggest trade that you have. So the trade with the biggest loss is the one that they're going to close off. All right, so you don't ever want to have that. If you're a Forex trader, most, if not all Forex traders at some point in time in the beginning have probably blown an account or two. You know, I've definitely blown an account before. You know, most traders have blown an account before. It's part of the process that most traders go through. All right. I'll say this as well. Being in drawdown, which means your equity is lower than your balance, does not mean that the trade is lost. Doesn't mean you're going to lose the money. It just means that at this particular point in time, you're likely to potentially lose it unless things change. All right. So far, so good, guys. Drop a number 1 in the chat if so far, so good. We're going to start to get into some more deep stuff. Drop a number 1 for me. If everybody's hearing me clearly, everything is good so far, everybody's following. We're going to start to go a little bit deeper. Just wanted to cover those basics. Okay. All right. I see the ones. I see the ones. Good stuff. Good stuff. All right. So let's get a little bit deeper. Let's talk about some of the basic things you want to understand when it comes to trading. Okay. So, like I said, when I put this out, I don't really want to go into all the extras. I just want to show you guys the stuff you need to know to make money. All right. So let's start right here. Let's start with what we call market structure. Okay. Market structure. What basically is market structure? So market structure basically is a way is being able to, or I should say, understanding market structure is being able to look at your chart just as it is right here. This is what I call a naked chart. All right. And being able to identify what the trend is. Okay. If you're taking notes, you can write this down. The trend is your friend until it bends. Right. If you want to take notes, you can write that down. The trend is your friend. Okay. Until it bends. Trend is your friend until it bends. So basically, you always want to follow the trend. What are we talking about when we talk about the trend? All right, fashion, right? Cars are in style. No, we're talking about the direction of the market. So here's the thing. We're gonna go on a 1 hour time frame. Okay. Now, if you look at this, you will notice that through the chart, you're seeing prices going up and then prices coming down. Prices going up, prices coming down. Prices going up over here, prices coming down. There's always this up and down movement. So first thing you will realize is the market doesn't move in straight lines. It does not move in straight lines. The market moves in waves. It's up, it's down, it's up, it's down, it's up, it's down. But here's the thing. Even though it's moving in waves, it's up and down, up and down, up and down, you also still have to understand that despite the ups and downs, there's generally a direction, an overall, we call it overall trend, all right, or overall direction of the market. Let me give you an example. We're going to focus on, let me just kind of move this out of the way. I'm going to put a marker right here. So let's put it right here. All right. So if I want to mark this zone out right here, I'm asking you guys, between these two red vertical lines, okay, we see there's ups, there's downs, ups, there's downs. Can someone tell me what is the general direction of this zone that I would have just blocked out here? What is the general direction of the price? Is it overall up or is it overall down? Because we got both ups and downs going on. Is it overall up or overall down? Okay.
The market is trending upward.
Market is trending upward. Very good, whoever that was. Good. I see everyone in the chat is saying up. So good. So this is an uptrend. Now, it's easy to pick this up with your naked eye. You can just look at it and you can tell. However, market structure is, think of it like the theoretical way of being able to tell whether market price is going up or down, whether the trend is up or down. One of the things you want to look for is what we call, I'll just kind of type it here. I'll type it here for you. All right, we call higher highs. All right. Just gonna put that there. So you've got higher highs and you've got higher lows. All right. So you got higher highs and higher lows. And I'll also go ahead and put the other two. You've also got, and I'll explain everything afterwards, lower highs and lower lows. All right. I'm pretty sure I was saying that you guys are there saying it to yourself as well. All right. Good. So you got higher highs and higher lows, lower highs and lower lows. So basically, like I said, this is kind of like a formal way of theory way of looking at trend. How do you identify higher highs and higher lows? Okay, so let me show you guys. Let's zoom in a little bit. I'm just going to pull that. Where is my zones? Okay. Where are my zones? Where are my zones? Where are my zones? Okay, so here we go. So here are the two zones. First red line here, second one here. So we can see the upward trend. Price is going up. All right. So here's the thing. Higher high. Think about the name of itself. What's a higher high? Higher high. So it means that the high, the new high that is reached, which if you mark say right here, I think we all agree that this high is higher than the previous high because obviously we were coming down at this point here. So this is a higher high here. Now then what was the low? Well, if that was the high, we can say that this here was the low, right? This is the lowest point based on the data that we're looking at. This was the lowest point that price went to within this period of data. So this was a low, higher high, all right, low. Then you have here remarked by another line. Actually, let me use my rectangle, much easier. So then you've got another low here, and then you've got another high here. So we got a higher high and a higher low. We got a higher high, and then over here again, we got a higher low. This low is now higher, all right, than the previous low. Then let's keep going. Then we got a higher high, and we got a higher low. So basically, you know, again, we can talk about market structure. You're looking for higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. And there are other times where you're going to get, for example, if you look up here, you've got a high up here, all right? And price would have dipped. It pulled back. So then you've got right here, you got a lower high and a lower low. Okay, so high, pull back, right? So low, lower high, then you've got a lower low here. Now, even though price does push back to this zone here, if you look at the pattern overall, what I want you to understand is this. You're always creating lower highs and lower lows. So think of it, it kind of looks like a stairwell, yeah, like a step, a staircase. You see that? Lower high, lower high, lower high, lower high. Beneath here, we're creating, oops. So you got those lower lows, lower lows, lower lows. You guys see that? Lower lows. So higher highs and higher lows, lower highs and lower lows. This is the formation of a downtrend. This is the formation of an uptrend. So the question is, how does market structure help you in all of this? When you realize that no more higher highs are being created, no more higher highs and higher lows are being created, that is your indicator that the market trend is getting ready to change. If you notice that look at this movement here, you notice it was higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, okay? All the way up. So you had a staircase going up, all right? Had a staircase going up, and then you had staircase coming down. But do you notice when it got to this high, what happened? Did it continue to create another higher high and a higher low? No. If anything, what it did, it came back up and it retested the same high. Now, here's the thing. Does that in itself mean that price will drop? No, it doesn't, because it might have tested the high, it could have pulled back, and then it could have created another high over here. For example, look at this zone right here. High, low. This didn't break this previous high. It didn't. It went here, which is actually just a little, just a little bit lower. Came back and retested that previous low, and then it shot up. So that could have happened. You see? So you don't want to just assume because, okay, pattern has changed or is broken, it means price is ready. It doesn't always work that way, which is why it's always safe to wait for a pullback. If you're taking notes, you might want to write that down. It is always safer to wait for a pullback or to wait for a retest. Going on into this trading, I'll show you another reason why that makes a whole lot of sense as well. So price went up to this point, it pulled back, went up to this point here, and it pulled back. If you notice, it retested this zone. All right. I'll explain what these zones are for those of you who are brand new when we talk about support and resistance. Went back up, retested the same zone, came back down right here, right? Actually, if I were to pull this right across, all right, coincidence? No. It came back down to this zone before it pushed back a little bit. And here's the thing, then it dropped. Now, one of the things I want you to think about is this. When you are looking at movements in charts, when you see movements like this, big movements all the way up, you know, or big drops all the way down, there will always be a big pullback. All right? There will always be a big pullback. If there's a small drop, there might be a small pullback. If there's a big drop, you better believe there's going to be a big pullback. Okay? Now, we're going to look down the road as well when we look at Fibonacci, what helps you to identify those pullbacks a lot sooner, okay? But right now, we want to keep on the basics. So before I move on to support and resistance, I want to understand, do you guys, especially those of you who are new, do you have a better understanding of market structure? Higher highs and higher lows. Price keeps pushing up, then it comes back down, but it never comes back down as low as it was before. It goes a little bit higher, creating a higher high, then it gives you a low, which is a little bit higher than the previous low. And that pattern, higher highs and higher lows, higher highs, higher lows. Then inversely, you have lower highs and lower lows, which now actually mark out or chart out your bearish trend. Okay, everybody, so far so good on that. If there's anyone that doesn't understand, make it known so that I can make sure that we go over it. All right. The aim of this really is to help you guys to understand the basics. All right. If everybody's good so far, drop a number 1 in the chat, and then we're gonna keep going. Any questions, queries, doubts, or concerns on anything I've mentioned so far? Anyone have any questions? Anyone have any questions? If you're new, try to understand, and you have questions, ask them, because that's the whole purpose of me doing this. Okay, I see no questions. Very good. Let's move on. So let's talk about support and resistance. Now, support and resistance is a principle, is a principle understanding that every trader needs to know. And the reason for that is this. Remember I mentioned earlier that price moves in waves. It's up, it's down, up, it's down. What you need to understand as well is that those waves are moving within zones. And those zones are created by different, are basically what we call resistance zones and support zones. What is support? Let's start there. Support basically is where you have at least 2 tests of a particular area, 2 times that price has tested a particular area. For example, if we look at this particular section right here, all right, let me just remove this from there for you. If you look at this section right here, let me just delete all this stuff off the chart. All right, there we go. So if you look at this section right here, price went up to this point here, it came back down, candle came to here, did a little dilly-dally. So here's what we do. Once you start to train your eyes to look for areas where price constantly retests, this is where you can start to find support zones. For example, this would be considered a support zone right here. All right, why? Because price came down to it, it bounced off, came back to it, went up a little again, came back to it a 3rd time. 2 or more times gives you that support zone. The more times that you have a touch on the same zone, the stronger your support zone is. All right. Now, inversely to support, you also have resistance. I'll just go with a simple example here. All right. Here is an area of resistance. Okay. I also call it areas of value. So an area of value is either a support zone or a resistance zone. Now, you will have some cases where support could be resistance. And you will have some areas where resistance could turn around and be support. What do you call that? Anytime you have a support zone that becomes a resistance zone, you call that turncoat resistance. Anytime you have a resistance zone that becomes a support zone, you can call that turncoat support. For example, let's look at this same line that we drew here. I'm going right back. If you realize all I'm doing, I'm pulling left. I'm pulling left. All right. Always remember, look left when you're trading. Always remember to look left. You can write that down. Always remember to look left. The reason that you want to always learn to look left and practice yourself in doing that is because in trading, in Forex, price always repeats itself. History always repeats itself. If price went to a point before, I can assure you it's going to go to that point at some point again to test the strength of that particular zone. For example, if you look here, you notice that this line that we drew, which really was support, when we drew it, over here it's support, over here, you see how price comes to it, it's support. Now look, price breaks it, comes back to it, now it's resistance, okay? Price breaks it here, comes back to it here, resistance. Here, resistance, all right? Over here, it's support. Over here, it's support. Over here, it's support, 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 support. When it breaks it, look what happens. Price comes down, it retests it, resistance. So basically what is happening is you've always got this situation of buyers, right, trying to push price up, and you've got sellers trying to push price down. So this is why you always have, you know, if price is being trying to be pushed up by the buyers and the sellers are trying to push it down, what happens is you get a zone that is created at creating an area of value, because these are points where, you know, you get a lot of candle closes, right? Because the buyers trying to push it here and the buyers trying to push it up and the sellers trying to push it down. And what happens sometimes is, you know, price just kind of stays within that zone because there's this constant, never-ending struggle of some people trying to buy and other people who've been in it before and they're trying to close off and take their profit. So they're selling. So you've got buyers and sellers at the same time doing their thing, and it creates these areas that we call consolidation. For example, like this section right here. You see here? Let me just kind of mark that out for you. You see this here? So price is not going up in a major way and it's not coming down in a major way. It's just kind of fighting. You got these, you know, some people, you might call them order blocks. Different people call them different things for different reasons, all right? But as you can see here, price is not going up in a major way, coming down in a major way. It's just this back and forth, up, down, up, down, up, down, stays within this zone, all right? Same thing here. Now, here's the thing, and I'm just going to kind of flow right into this. As you're seeing this, all right, this in itself is a strategy of trading, by the way. A very, very simple strategy. There's nothing special about it. For example, if you're looking at these blocks, you're looking at price, you're noticing, okay, price is not going up in a major way or down in a major way. It's going across, lateral, vertical, you know. Well, what you can do then, mark that block out. Just mark the block out. Look at, okay, price is bouncing between this zone here and this zone here. Price, and so what you would be waiting for essentially is a breakout, all right? So we're just gonna make a note so that I don't keep repeating myself. So we've covered market structure. We've covered, we're looking at support and resistance. And I'm gonna show you guys now, I'm just gonna put this here. We're gonna show you guys some breakout trading and so on, okay? But I'm just gonna flow with it. So basically, what you would be looking for in a situation like this is when price itself breaks out from a particular zone. What happens is when price breaks a zone that is being caged in for a while, and it will always break out, either up or down. Anytime, this is for you guys who are new. Anytime that you're looking at the chart and you notice that there's consolidation, expect a breakout. All right? Expect that there will be a breakout coming. It's either going to break out above or it's going to break out below. All that you need to do, very simply, look at where price is bouncing, is consolidating, mark that box out. And when you get price breaking that zone, for example, you see price broke it here. When price breaks that zone, it's likely it's going to go down. But what did I say is a safer thing to do? Let me see who's paying attention. What did I say a little earlier? If you want to be safe, what's a safer thing to do when you see a big move up or a big move down? Does anyone remember? I said I'll come back to it. Anyone? Very good, Willie. Very good. You wait for a pullback, all right? You wait for a pullback. Because here's the thing. You don't want to jump into a trade prematurely. You got to understand that what we call market makers, the banks, basically, the huge hedge funds, the financial institutions, what they're looking to do always is to trap you. Their focus is to give you an impression that price is going to do something, and this is just what makes sense. So when you do that without thinking first, but wait a minute, what if this could be a trap? What if this could be a setup to trick me? Once you start to think like that, you start to change the way you trade. So yes, it did break out. You see a big red candle. You said, perfect, jump in. Let me buy. Let me sell. Well, what you don't understand is there's something called stop hunts. In other words, stop hunts are designed to hunt your stop losses. For the sake of the new ones, a stop loss is a parameter, a risk management parameter that you put in place to prevent you from losing all of your account balance. Hence, we call it a stop loss, to stop your losses. Okay, so a stop hunt is where there's an impulse movement where price may just shoot in one direction, whether up or down, and going against the direction you want, of course, and hits your stop loss, takes your money, and then after that is done, market reset, settles back down, and price continues to go the way you were hoping it would go. Now you're pissed, your belly hurting, you feel sick, and you just have to watch the profits that you could have had just disappear in front of your eyes, right? So what you always want to do is wait for a pullback before entering a trade, okay? Just give an example. In this case, we got to break up here. Price pulled back to this zone, so which means you would have been allowed to draw down because you would have entered a sell and you entered, right here. The minute you entered, boom, price goes up, up, up. And now what happens is you're not seeing any of this other stuff here as yet, mind you. This hasn't happened as yet. It's right here. So all you're seeing is price going up, 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 up. You're like, oh, damn it, I missed it, lost my money. Okay, let me switch it around. Price is going to go up. You jump in, you put in a buy, and then the minute you put in your buy, back down, and then you get pissed. All right. So all I'm saying is, don't be hasty. All right. Trading is one thing that will teach you patience. It will humble you very, very quickly. Trust me, I have learned my lesson. My personality is a go-getter type personality, but trading Forex, it humbles your spirit, right? If you don't learn to be patient, you will lose your money trading Forex. I promise you that, okay? Let's keep going. So we looked at support, we looked at resistance. Let's look at some more examples, okay? Just come on to the M15. So what I want you guys to do, for those of you who are new, set your MT4 trading account up and just start to go through the trade, go through the pairs, and just start to mark these zones out. For example, if you look here, back, you can see this is an area of resistance, right? Price tested here more than once. Just go through it. Look for areas of support. Look for areas of resistance. Now, I'll tell you this. There's different ways or different types of support and different types of resistance. All right? There's horizontal support, which is like here, for example. Price came here. There's up here. All right? So you're just marking those zones. Just mark those zones. Just mark them. Just go through the chart, go back in time, start to mark them. And the reason you want to do that is you want to get your eyes accustomed to seeing these things, to picking them up. Now, here's the thing. Outside of horizontal support, horizontal resistance, there's also vertical support and vertical resistance, okay? So let me show you how that looks. So you see we got our straight lines, but you can also use this button up here. It's called trend line button, draw trend line. And you can come and they want you to, again, train your eyes to do this, start to look for these things. You see, price can also hit support or resistance in a slanted form. So for example, if you look here, look what happened. Price came up, came down here, up, down, back. It hits here. It goes back up to here. All right. Now, why here? Remember, price always repeats itself. I'm pretty confident if I draw a line right here, this is a zone that was tested before, like right here, like right here, like right here. Go back, right here, here. So you see, there's no coincidences. Price goes to where it's been tested before. So you should be saying to yourself, well, wait a minute, but if that's the case, all I need to do then is get in the habit of marking these zones out prior. You see, if you mark them out before, it means that when the market opens and you're looking at your charts, you already have a very good visual as to where price is likely to hit, where price is likely to go to. One of the things that I use, or I use it sometimes, but this is one of the things that I first started trading on, was called a line chart. Up here, right? Look up here, there's a little tab here, it's called line chart. Switch to line chart. What the line chart basically does, it removes all of the noise. It removes all of the wicks, all right? And for those of you who might not understand what I mean when I say wicks, let me zoom in. If you look at these candles here, do you notice that some of them, let me just zoom in a little bigger. Let me just find a nice one for you. Okay, So let's look at this one right here, okay? So there's 5 different parts of a candle, okay? All of these are candles. There's 5 areas of a candle. There's the body. The body is this opaque section that you see where it's all red, or if we look at this green one, all green, red. Where it's all red here, that is the body of the candle. Then you have the open of the candle. So, or let's go with the high and the low first. So we got the high. The high obviously is the highest part of the candle. You see the little wick there? That's fine. We call it a wick, or some call it a shadow. All right, a wick, a shadow, a tail, whatever you want to call it. All right. So I'm just going to go with wick. So you've got a little wick to the top. You've got a much longer wick to the bottom. This is the high. The the lowest part of that candle at the wick here, this is called the low. So you've got the high, you've got the low, all right? You've got the body, which is the opaque section, all right? Can't see through it, it's not, all right? It's just thick, full candle. Then you've got the open and the close. Being that this is a sell candle, a red candle, a bearish candle, it means that it closed at the bottom. So if it closed at the bottom, then it opened at the top. So you've got the high, the low, the open, the close, the body. You guys have that? Everybody have that? Drop a number 1 in the chat if you've got that right now. All right, you've got the high, the low, the open, the close, and the body. 5 areas to a candle. Now, I won't get into candlestick patterns. My advice, go read Candlestick Bible. I'm not reinventing the wheel. All right? But it's very, very important that you pay more attention to the close of the candle than the wick of the candle. The wick shows you where the candle went to. It basically means if you look at this candle, it is showing you that all the way down here was at one point a full red candle, just like this one right here. Just like this one, it was a full red candle. But it didn't stop there, all right? It went this far, but it didn't stay that far. It pulled back and it closed here. So here's why it's important to pay attention to the close. Even though the wick shows you where it went to, the close is what you need to pay attention to, because it says this is where the area of value was created. This is where, between the buyers trying to push it up and the sellers trying to push it down, this is the point that they were able to fight and get it to. Everything is now going to happen from that point onwards. And I also want you to write this down. Write this down. Always pay more attention to the shape of the candle versus the color of the candle. All right, write that down for me. Always pay more attention to the shape of the candle versus the color of the candle. Do not assume that because you see some green candles, it will always go up or continue to go up. Don't assume because you see a couple of red candles, it means it will continue to go down. It does not mean that. What you want to pay attention to is the trend, because the trend is your friend until it bends. Now, here's what we're looking at. When you see these wicks, wicks tell you a story. Wicks tell you, hey, I know that I'm coming down in this scenario right now. I know that we're coming down, but I'm getting tired. This trend is starting to burn out. So pay attention to the wicks of your candles, guys. All right? The wicks tell a story. The wicks tell you that there's a likelihood that price is trying to turn around. Market structure is trying to turn around. For example, if you look at this, look here, price is going up, slightly, slight advance here. Then what happened? Oh, long wick. Not a little wick, a long wick, which means the candle went all the way up here, but then the sellers were like, we're trying to push this baby down. So it pushed the candle from up here all the way back down here. All right. That tells you that the sellers are trying to take the market over. All right. And look what happened right afterwards. After that happened, it started to crumble. Crumble, 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 crumble. Now look, it got down here. What happened? Price came all the way down here. And then what happened? A wick, which means the buyers are saying, we're trying to push this back up. So even though the candle came down here, It pushed it all the way back up here, telling you that the buyers are trying to enter the market. And what happened just very soon afterwards? Price started to go up, creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. All right. So you want to pay attention to all of these little things when you're looking at your candlesticks. Are there a lot of wicks? Are the size of the candles bigger or smaller? Right, which can indicate volume is decreasing, which means something is about to happen. All right, it's kind of like consolidation. When you see big candles, big candle, big candle, big candle, then all of a sudden candles start to get smaller, 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 and then drop. You see that? So you wanna pay attention to things like that as well. Now, we were talking about trend lines. You guys know this 1, 2, 3. I heard this and I always remember it says 1, 2, run it through. So the same way with a horizontal support or horizontal resistance, you get 2 times that zone is retested. Hits there, goes wherever, it comes back to that same zone, and then from there it moves off. You want to do the same thing with the vertical support. Couple things about drawing trend lines though. A lot of people I see make this mistake. One, once a trend line has been cut, like you're cutting through the bodies of candles, it is no longer valid, right? It is no longer valid. Like here, for example, 1, 2, price came here, bounce, came back here, 1, 2, draw my trend line. So once you mark this first zone, it hit this candle right here, went up, came back down here, right down to here, you could have entered, buy, back. Came back here again, went below the trend line, but it did not close below the trend line. It did not close below the trend line. It closed above the trend line, which means the entry or the setup is still valid. And on that third touch is where the really big move happened. 1, 2, run it through. 3 confirms the move. You got that? 1, 2, run it through. 3 confirms the move. Bam. Nice big move from here. Okay. And you're up. You're in profits. Okay. And what you can do is if you've got your zones marked out, you're taking it from zone to zone. For example, if I were in this trade, this is based on the time frame I'm working with. If I'm working with a small one, my resistance, instead of here, which I would have seen as my resistance would have been here. Why? Because I know price went to here before. Therefore, if it's bouncing from my trend line, I can say safely that my price is likely to go back to this zone to test it. Now, it could break it, gives me more profit. Sweet. But I know at least for sure I'm looking at around here. Okay? Any questions so far? Any questions so far, or are we good? All right, don't see any questions. Good stuff, good stuff. Now, here's the thing. The same way that you've got vertical support, all right, you can also have vertical resistance. All right? You can also have vertical resistance. Now, you don't ever want to try to force your trend lines. You want it to be natural. If you're going to be trying to force it to fit on the tops of, no, that's incorrect. That's incorrect. Don't do that. You'll mess yourself up, all right? But I want you to notice something. Do you notice that I drew an outer trend line here and one here, all right? And by the way, you can also have, those outer trend lines, but then you can also have inner trend lines as well. You can have trend lines that are drawn within trend lines. So you've got the major trend lines and you can have the minor trend lines in between as well. All right, see this? So even though you got the outer here on the top, all right, and the lower one in here, we can still find another setup for a trend line, okay, right here. And I want to show you something. Watch it, check this out. Remember we talked about zones and how things respect each other? I want you to notice this. Let me just kind of pull this across. If I looked at this and I said, okay, so price came here, mark that out, support zone, just draw it right across. Do you notice that it was hit again? I come here again. Price came to this section here on the trend line, mark it up. All right. Now really wicked is where the candle body is, okay? Where it closed. Check that out. Just so happens it was touched again. You guys see any pattern here? Price always repeats itself. All right? You mark your lines, let them go across. Price will come back and you will at least have them on your chart, okay? It's always testing somewhere, always. Look what happened, price came down, it broke the trend line, okay? You didn't get much of a pullback, but you did get this candle here, came down, pulled back to right here, but then it came down and it closed here. Just right where this price, this support zone was. Price pulled back and then dropped. Pulls back to here. Why here? Well, let me show you why here. Let me just take my cross here. Look at this. What do you guys notice? If you don't see it, let me draw it up for you. Draw from here and then go across. What do you guys notice? Where it came down and touched this trend line here, where the wick came to, look, price went right back to that exact same spot. All I'm trying to get you guys that are new to see is this. When you're trading, it's really a matter of kind of taking a step back and just being able to observe what the charts are telling you. If you just look at what the charts are telling you, you know when to get into trades, you know when to get out, you know where price is going to bounce from, where it's going to touch, where it's going to probably reject from. All right, how far it's going to go to. All of these are things that you want to pay attention to when you're looking at your trades. Okay. Now, like I said, trend line trading, again, for the new ones, take some time, look at the chart, try to figure out, here's another one, try to figure out where you can start to mark those zones. All right, here's another one. Look, now what do you call this space in between here? You call this a channel. Okay, you call this a channel. Two trend lines, one above, one below, horizontal and resistance, support and resistance. All right, and if you notice, price will bounce in these channels. Check this out. Price came into the channel, hit there, up to this point, came back to where? To this zone that we have marked out. Bounce from the zone back to the trend line to do what? To retest it. So don't always expect it to come horizontal. It may come a little bit under, but that could be a setup now for a vertical resistance. All right, look what happened after it bounced from the resistance. Back to support, back to resistance, back to support, back to resistance, back to support, close to resistance. All right, but what you're seeing here, the pattern, now look what happened. When it breaks out, let me show you something. Let me show you something. I always said, wait for the pullback, wait for a pullback. Price broke it, right, going a little bit more. All right, here we go. I want you to see this so that you understand I'm not just saying stuff. Price breaks the trend line. Now, the minute that price breaks your trend line, what you should do if you want to trade safely is, now in some cases, price will break it and it just right up. Not much of a pullback, give you somewhat of a parabolic move. That's fine. Can't get all. But most cases, when you get a breakout of that trend line, price will pull back to that zone. You see it here? Look, you guys see these candles here? These candles basically mean, look, we've broken this zone that all along, this zone was an area of value, all right? Touched once, twice, 3 times, 4 times. It was a very strong resistance zone. But the minute it is broken, now what they're going to say is, okay, we broke it, but is it really that strong? Will it hold? So you don't just jump in here because it might go up there and then guess what? It might drop all the way back down. It might have just been a stop hunt to knock your stop loss out. If you entered the trade anywhere here, you had a stop loss up there. Just went up there to knock it out. It tested it. And once it tested it and it stays above your trend line, you can enter your trade off the retest. Okay? You enter your trade off the retest and look what happens. Price shoots right up. And where did it shoot up to? Another zone. Right? Where are we? Where did it break it? Where did it break it? Come back down. Where is the zone I was just marking? Oh, here we go. Right, here we go, right there. All right. So again, if we drew this, we had this line marked out before. All right. We had it marked up before. Even here, if you even drew it a little closer, we had a right here. Price went up in this zone, touched there, went up, retested there, and you mark, boom, resistance. So now price is up in this zone. So all you're doing, you're watching to see what's going to happen. And look, it breaks it, retests, shoots up to that zone, then it drops. And look what happens when it drops. Where did it drop to? Somebody tell me this is a coincidence. Is it? Do you think it's a coincidence that when it drops all the way back down, but only to the very same point that it broke and not a bit further? It hit the same trend line, tested it, right? You see the wick. Did it crack the wick? Did it crack it? No, it didn't. Went to it, pushed back up, and just kept on going. All right? For a nice, slow, steady, continuous increase. All right? So, again, for the sake of the new ones, go on your charts. Look for zones, horizontal zones. Look for resistance zones. Just look for them. Nothing special. Just mark them out. Just mark them out. Get your horizontal line. Use your rectangle shape if you want to. Mark them out. Get your eyes accustomed to picking them up. Look for vertical zones and mark out some vertical zones on your chart. Now, what I'll tell you is this. Anytime that you see a move, like how we've got a vertical move here, all right? Fine. We got a vertical move, is an upward trend here. Anytime that you have a move that is too sudden, that is too steep up or too steep down, don't trust it. All right? Don't trust it. If it's going up too steep, do not trust it. It's very likely it's going to drop pretty hard. Okay? It's going to drop pretty hard. If you see a drop that is too steep, too sudden, don't trust it. What you want to look for ideally is these steady inclines, these steady movements up. Yeah? That's more what you want to look for. Like this, a nice steady movement up or a nice steady movement down. But if you get a movement that is too steep, too fast, or do not trust it. All right. So that is a little bit on trend line trading. I'm trying to cover as much as I can. We're already over an hour. Any questions on this before I move on? Any questions, queries, doubts, concern, anything anyone wants to ask before I move on? If no, and you guys are good, drop a number 1 in the chat and we can move right on. Next thing we're going to cover, I'm going to look at very quickly is, oh, we got some topics, boy. Is let's look at breakout trading. All right, I see ones, no questions, good stuff. Let's look at breakout trading. Let me just pull up a different chart. All right. What really is breakout trading? Breakout trading is very, very simple. Very, very simple. We kind of touched on it before. I'll touch on it again. Now, a lot of strategies are based around breakout trading. But let me just give it to you guys in what we call layman's terms. So what's the first thing you want to identify when you're trading? First thing is you want to identify the trend. That's the first thing. You want to identify the trend. What is the overall trend? So point number 1, what's the trend? All right. What's the trend? Point number 1, write it down. Trend. Find the trend. Point number 2, is it at support or is it at resistance? Okay. So that's point number 2. Is it at support? All right, it says where you just marked, what would it be a buy or a sell? Okay, well, let me go back and show you that, Rhonda. I think it was on this. You said where I just marked. Not sure exactly which section you're referring to, but I'm just going to pull it back up. Well, let me just explain here. Always buy at support and sell at resistance. So you want to write that down. Always buy at support and always sell at resistance. You never buy at resistance. You never sell at support. Buy at support, buy at resistance. So once you have identified a support zone, this is where you're looking to see if you can enter your buy. Once you're at a resistance zone, this is where you're looking to enter a sell. But always make sure you're going with the trend. And the reason you want to go with the trend is because if you're sailing a boat, you don't want to sail against the wind. You want to go with the wind. If you go with the wind, you're more likely to get to your destination much faster, and it's much safer and probable that you will reach your destination as well. If you're sailing against the tide against the wind, you want to have a lot more resistance in trying to achieve your goal and target. So you don't want to go against the trend. You want to stick with the trend. The trend overall is up. So what you would want to do is, instead of looking for sells in this scenario, you want to wait for only buys. Does that make sense, everyone? If the trend is up, you only want to look for buys, 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 not sells, because in a sell, it could potentially reverse on you without any kind of warning. You want to get the buys in an upward market. Okay, at the square, is it a buy? I'm not sure which square you're referring to, but right here, if you're referring to here, yes, this would be a buy. This would be a buy, all right? Because price was coming down, lower lows, lower high, lower highs, lower lows, lower highs, lower lows from up here. Lower high, lower low, lower high, lower low, lower high, lower low, lower highs and lower lows. So downtrend. Then it breaks your area of value, okay? Price is starting to go up, but it breaks your area of value that was tested. It's not like it wasn't tested before. It was tested, so you know it's an important zone. So the minute it breaks it, you wait for the retest, which is right here, and you enter the buy on the close of the sell. All right? You enter the buy on the close of the sell. And inversely, if this were happening on the flip side, you would enter the sell on the close of the buy. All right? Pretty much the same thing. Okay? All right? That answers your question? Okay, good stuff. Not a problem, Rhonda. All right, let's go back to what we were looking at here now. So we were going to look at breakout trading. All right, very, very, very simple strategy that anyone can use. Breakout trading, again, what you want to do with breakout trading is you're looking for those areas of consolidation. I already touched on this earlier. When you see an area of consolidation, for example, I'll do this very quickly, but you'll understand it. I'll take my rectangle box right here. And as you're looking at your chart, you know, you're looking, price is moving, price is doing its thing, and you're looking for zones that are being retested over and over and over. Price went here, came back down. Oops, what just happened there? I'll just draw a couple of them on the screen. So first thing I was saying, look for your trend. 2, look for, is it at support or resistance? All right, is it at support or resistance? You want to identify that. So trend over here, overall up. All right. Next thing you want to do, you want to only buy because it's an uptrend. So you only want to be buying. All right. So what are you doing? Now, obviously, this is already passed, so we can see it. But if you weren't seeing it, what you definitely want to do is you want to go back. You want to go back. You want to look for those areas that would have been tested before. You want to look for where price went to, where price was tested, where it would have bounced from, where it would have, you know, all that kind of stuff. Why is it not showing? Like chart. Why is my rectangle not showing? Oh, there we go. All right. I'll just draw this right across, right across. All right. Just want to, you mark those zones out, mark those zones out. Because you don't know at what point where it may be tested again. Okay. So you want to mark those zones out in the early. All right. So price went to there, came to there. Okay, went back to here. Mark them out. Nothing's wrong. Mark them out. All right. Why? Because if you check it, look, it bounces within those zones, bounces within those zones. Okay. Now, breakout trading. What you want to do basically is you're looking for where prices is retesting over and over, where prices being retested over and over and over. For example, okay, if we look, okay, check this out. Price went here. So this is pretty much a nice reversal. A nice rejection here. Price went to resistance, came back down right to this zone, went back to this zone, retested. Where price hit here, because you know it was already tested over here, this will be a good area that you could potentially be looking for a sell. Why a sell? Because remember, check market structure. It's coming from over here. I'm just showing you guys as I would look at it. Where is it? Where is it? Where is it? Where is it? Where did it go? Where did it go? Oh my goodness. It was just there. Okay, I don't know. I don't know what just happened. It just disappeared. Nonetheless, let's do that again. Let's do that again. All right. Let's use here. Grab my box. Price went here. All right. I mark this zone out. Now, again, I could have come, if I put a line right here, price went to this point before, right? Marking those zones out, marking those zones out, marking those zones out. Price is bouncing, doing its thing, okay? Went up here, all right? Zoom out a little bit, okay, good. Mark those zones out. Price went there, went back there, drop, all right? Mark the zones out. Came back all over here, was tested, even down here, right? Price came to here, mark that zone out. Came back here, it was retested. It always tests those zones. So what you're doing is this, you're looking for where price was actually, I could even go here, okay? Let me show you this. Price went here, came back down, right up here. And it's bouncing within this area here, okay? All within this area here. What happens? Price breaks out. Now, what the thing is with breakup trading is, you're basically waiting for price to cross out of the box of consolidation, out of the area that is being tested and retested all along. We got a number candle bouncing, 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 came down here, probably mark this a little bit lower here, right? It went here, came here, went back to here, back down here. So I'm like, okay, it's frustrating me now. So I'm marking this zone, marking this zone. So now I'm like, okay, here's what's gonna happen. Price is either gonna break out of this zone to the bottom or to the top. I don't know. All I know is, again, if you're paying attention, what was the overall trend? You see that? You see that? Price came to this point. Went up, back to this point. Went up, back to this point. Back up, back to the same point. It's just about training your eyes to see what the market is already telling you. All of these zones, they're right there in front of you. You don't even have to guess. You don't have to guess. Look, look. All of the same zones, price went to here, came down to this point, right back up to here. Why did this come to here? Well, look, I'm going to draw from right to left, look. Because that particular area, that particular area was already a zone that was tested. You see what I'm saying? Test, retest, break it. Here's another zone we can mark out. Check this out. Price goes down. Comes up, we got a nice little box we draw there around where price is bouncing, bouncing, staying in that section, not going too far. This is a 15-minute time frame, not a lot of time. And then what happens? It breaks out. The minute it breaks out, what do? You can wait for a pullback. Now, price will not always pull back exactly to the point, but you want to wait for a pullback. You want to wait for a pullback. It went up, then you had this candle, it went up again, it pushed back down, but it closed here. And it stayed above. You call this candle here the confirmation candle. This one here, you got this one here, kind of like a bullish engulfing, all right? Like a bullish engulfing candle. It engulfs the previous candle, actually engulfs a couple of candles. It goes up, you got a confirmation candle, and that confirmation candle breaks out of your zone. You got another confirmation candle that closes above the zone after the breakup candle. You got the breakup candle, the confirmation candle. You got a lot of things telling you, hey, I'm trying to go up. You just got to pay attention. All right, you got the box. You got the bullish engulfing candle. You got the breakup candle. You got the confirmation candle. All tell you the same thing. And you enter that trade up. All right, a buy. You wait for this candle, it pulls back. You can enter there, you're in the trade. Here's another example. Price is doing its thing, it's going up. So we know it's an uptrend. So we know if it's an uptrend, we're looking for what? Buys, okay? Same thing, breakout zone. Could break out above, could break out below from the resistance. It's an uptrend, so it's more likely to keep going up. Why? Because so far, we've got higher highs and higher lows, higher highs, higher lows. We don't have lower highs and lower lows yet. So there's nothing that's telling us that the market is going to go down, which is like out here. Price here was going up, but look, we got lower high, lower low, lower high, lower low. So you actually have the market saying, hey, I'm telling you what I'm doing. I'm breaking down. I'm changing trend right here. Over here, it still gives you higher highs and higher lows, which means we are still in the uptrend movement. You got your box drawn out. It breaks out of the box. So check it. You got your bullish engulfing. You got your breakup candle. You got your confirmation candle still above the zone. Look, pull back. You into another buy. Boom. It comes back and it retests. Okay, that's fine. If you enter it around here, your stop loss should be down here either way, below the last area of value, down below here. So yeah, it pulls back, that's fine. Back to the zone, back to the trend line. All right. Once it hits this trend line, which is already tested, 1, 2, 3, hits your trend line and stays above the trend line. Uh-oh, did I just lose? Did I just lose connection? Can you guys still hear me? Testing, 1, 2, 3. Can you guys still hear me? Let me know real quick.
Oh, yeah. Somebody.
Okay, cool. My my MT4 just lost connection. All right, that's all right. Once you guys can see the screen. So yeah, it comes back to that area of value, that trend line you've already marked, which tells you if it does that and it stays above it. Now, yes, you might stay above it a minute, look there, but it didn't stay above it. It broke it a little bit. Now, here's the thing: if it breaks it like that, it's not a huge break. What do? You wait. If you're not sure, right? If you're in doubt, leave it out. It breaks it, and you might say, but it didn't close above it. It closed just below it. Fine, wait. Will there be a confirmation sell candle and a retest? Because if you do that, if you get a confirmation sell candle and a retest, then it will drop. But it breaks it, pulls back with a wick, so it just barely breaks it. Next candle, huge bullish engulfing, confirmation candle as well. Oh, okay. Right, huge bullish engulfing candle, which closes above the zone. And this is why I keep saying you want to pay attention to where the candle stops and not only where it goes to. This wick might have been all the way down here. It doesn't matter. If it closed above here, then that is confirmation that the buyers are definitely still have a strong foothold in the market and they're trying to push this thing back up. And if it closes above your area of value, you are still in the trade. The setup is still valid. All right? Higher highs, higher lows. Now, again, for those of you that were paying attention, we talked about market structure. I want you to, do you see how everything's kind of meshing together? So check this out. How high do I go, Olivier? How high do I go, coach? When should I jump out? How long will this trade run for? Well, what does market structure tell you? Higher highs and higher lows means uptrend. Well, okay, you wait until that trend is no longer valid. Well, do we have higher highs and higher lows here? No, we don't. Look, price reaches this point, right? It reaches this point, and then what happens? Do we get a higher high and a higher low? No, we don't. As a matter of fact, you get a lower high and a lower low. Lower high, lower low. You see that? If you don't see it with your eye, let me draw a little triangle. Look. Oops. I want you to see the slant. You see that? So we were coming from slanting up, never slanting down. We got lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. So now the market trend is changing, which tells you there's a likelihood of a potential move in a different direction. So what do? Mark your box. We do it again, third time. Price went from here to here, back to there, back to there, back to there, back to there. So you're like, okay, this is getting frustrating. Something is going to happen. It's either going to break up above or break up below. But because that you can see market structure is telling you is likely to drop, then you know you can prepare yourself for a drop. Now, another thing that I'll tell you guys real quick, I'll write it here on the screen, is a word that you want to get accustomed to. It's called confluence. What is confluence, guys? Confluence based is when you have multiple things giving you the same outcome. So, for example, you know, you're looking at this particular movement, and you're seeing, for example, right here. All right. If you take this point here, what happened here? Well, check it out. We know we've got our trend line, right? Yes. Price went up, price came back to this zone, but here's what just happened. Not only did you have your vertical trend line telling you if this thing bounces at this point, it's going to go up, you also have a zone that was marked out. You also have a zone that is now, it was resistance, but it's also support. So it's now turncoat support. So you've got multiple signals all giving you the same example of what could potentially happen, which is not only is it an overall uptrend, not only is it potentially bouncing on my vertical support trend line, but also is happening right in the zone of horizontal support. That is confluence. That is multiple things saying, hey, I see it too. Hey, I see it too. Oh, you too, but I see it too. When you get multiple things lining up like that, that's a very, very strong signal. And look what happened. You could enter that trade with a buy and run yourself some pretty nice pips. All right. But here's the thing again. After every major movement up, there's going to be a major movement down. I mentioned that earlier. All right. I mentioned that earlier. It's something called the rubber band theory. I won't get into it, but if you think about a rubber band, when you pull a rubber band, how far it goes is going to be dependent on how far you pull it. So in other words, if you get a small pullback, right, or small movement, you're going to get a small, impulse movement. But look here, we got a pretty big impulse movement going up, especially right here. All right. So what do you think is going to happen when it hits that wall? It's like if a car is driving and there's a wall and the car hits that wall on impact, how strong that wall is. If that wall is really weak, the car might break right through it. Boom. Right? If that wall is really, really strong, the car hits it and repels off of it. So the stronger the wall is, the stronger the repulsion may be. Same thing you're trading. As you're trading, you're watching these impulse movements. The stronger the movement up or down, the stronger the impulse movement. Whatever it is that's strong enough to block that, to cause that to reverse. If you can stop a movement that is that big, that strong, it means you can expect a movement that is pretty big as well. Does that make sense, guys? That makes sense to you guys? If it makes sense, let me know it makes sense. All right. So I hope you understand from that analogy. So you can see here where you could have entered some buys. Prices, the resistance, the support, buy. Multiple opportunities to enter buys, but then you see market starts to change based on market structure. No more higher highs and higher lows. You now have lower highs and lower lows. It's time for you to get out. All right. And what happens? Price starts to plummet all the way back down to those zones. All right. All right. Good stuff. We've covered chart layout. We've covered support or resistance, trend line trading. Everybody understands the breakout trading. Type of number 2 if everybody understands what I was going through with the breakout trading. Draw your box. Okay, we got it down here. Got your box where price is bouncing from. You've got your breakout candle, and then you've got your confirmation candle, buy. If it's an uptrend, same thing here again. Breakout candle, confirmation candle, pullback, buy. Here again, all right, you got your box. It breaks out. Now, remember I said as well that sometimes you don't get a strong pullback. Sometimes it just plummets. Here's the thing. There always will be a pullback, though. Sometimes a small one, sometimes a big one. In this scenario, it broke out and it just pop. Fine. You're like, oh, man, I was waiting for a pullback. I never got one. I missed this whole drop. Well, don't stress yourself. Well, check this out. It pulled back right here, didn't it? Why there, though? Was there a reason why it pulled back to there? Well, let's see. Interesting. Coincidentally, not. It just so happens that this point it pulled back to is exactly where it went to previously. You see that? Price went to there, and it kind of dilly-dallied around there. You see that? You could have even drawn a box right there, but you're looking for buys, not sell. So it could be a sell entry there. All right? Price went right back to this zone, and once it went back to this zone and tested it, what happened? You got the whole drop from here all the way to here. All right, 56 pips. If that's 0.1, that's $56. So one lot, that's $560. So far, so good, guys. Got number 2. Okay, I see the 2s in the key group. Okay, good stuff. Now, let's move on real quick. Let's see what else we can cover. It is recorded, so you can go back and you can watch it again if you want to. Market structure, we covered that. Market zones. Okay, so market zones basically would be, I'll tell you this, market zones is pretty much what we were doing, the horizontal and the horizontal lines and the vertical lines and so on, but more so of the horizontal ones. What I would suggest if you're marking zones, you want to use zones like the 4 hour. And the reason for that is when you have zones like the 4 hour zone that you can mark out, they are stronger zones. The way that I mark my zones, and I've marked my zones for years, I switched to line chart. If you're on TradingView, I would tell you guys about Renko and all kinds of stuff, but I'm not getting that intense with the training. So I'm just going to show you guys the absolute basic way you can do this. This is the line chart. Line chart removes all the wicks. There's no more wicks that you will see on a line chart. For example, if you look at this, 2 wicks right here. Look at where this is. All right, I'll put a little square there so you can see. This is where the wicks are. Watch what happens when I switch a line chart. Ta-da! Wicks gone. So what it does, this shows you just the closes of the candle, just the closes. So when you're using a line chart, what you want to do is you look for the most prominent pivot points. You look for the most prominent points of our areas of value. And those will be, we can call them the spikes if you want. For example, right here, bah, mark a zone right there. All right, let me delete all of these other things down here for now. Don't need you, don't need you, don't need you, okay? So you mark this. Why would you mark this? Because this right here was a very strong point of resistance of an area of value. Pick another line, mark right there. This one right here. Pick another line and mark down here. Already put one right there. Already put one right there. All right, and you can mark this up, okay? Prices around here, you don't need a bunch of lines all above and below, but you can do that. You can come down to the 1 hour if you want, all right? Or you can come down to the 15-minute, 30-minute, however you want to do it. What I will tell you is this: it will bounce between these zones, as you can see here, zone to zone to zone, all right? It bounces between these zones, and it keeps on bouncing between these zones non-stop. If you're gonna mark them out above and below, you will notice that. You can also switch back when you're ready, that's fine. But that is an easy way to do it. It takes a lot of the noise off the chart. I would suggest you can mark the daily as well, right? I mark them in a different color. Mark the daily in one color, mark the weekly in a different color, mark the 4 hour in a different color, that kind of stuff. And where you see two zones are close together, let's say one was a daily and one was a 4 hour. You know, I won't get too deep into this. There's a whole different strategy and training, but I won't get into this. But when you see lines together close like that, it means that you're at a very strong resistance or support zone, okay? But being that we're just covering zones, I won't get deep into that. But I want you to see this. Look, notice how price went up here, right to that zone, how it came down here exactly to this zone. You guys think that's a coincidence? How these zones here match up, how price just happened to be right here in these zones as well. You think that's a coincidence? You see, once you start to understand this stuff, you literally know where price is likely to go to, which means you can predict almost with certainty when to buy and when to sell, and when to get in and when to get out, how long to keep a trade running and so on, okay? So you do that. Mark your zones out, switch your line chart, mark your zones out, and then you can kind of get a visual as well. You guys like that one? If you guys like that, drop a number 3 real quick. I got so much stuff to show you, man, but we already well over the time I was planning to go, to be quite honest. I wasn't planning to go this long. What else should I touch on real quick? All right, so here's one. I really want to close. I don't want it to go much longer. What else would you guys like me to go through? Should I go through Fibonacci? Should I go through EMA strategy? Should I do a top-down analysis? We can always do another training, man. I really didn't want it to go past an hour, but I guess it's so much information, right? How to place Fibonacci. All right, so here's what. I'm just gonna do the Fibonacci and then we're gonna bring the call to a close. All right, guys? Just for the sake of time, man, I apologize for this. So first of all, Fibonacci, okay, so Thomas is Fibonacci as well. All right, so the whole purpose of Fibonacci, just keeping it very simplified, is to give you a very good idea as to where price is likely to reverse to. Yeah? If you guys remember, I said earlier, price always repeats itself. History always repeats itself. So one of the things that you're looking for is if you get a huge movement up or a huge movement down, you know, obviously it's going to reverse. It's going to go in, market structure is going to change, and you're going to go in the opposite direction. What you want to be able to do is to identify how far could this thing actually pull back, right? Like, how long could I actually stay in this before it possibly drops again? So here's the thing, and I'll say this, right? Just so you guys know, Fibonacci in a sense kind of puts you against the trend many times, right? It could put you against the trend. So there is reverse trend trading as well, which is still powerful, but I wouldn't suggest newbies do it for the obvious reasons. Stick with trading with the trend, okay? But let me show you guys how it works out. So let me take some of this stuff off the chart, blank chart. So here's the thing. So with Fibonacci, what you want to do is you want to mark, or the theoretical way that it's always said is you want to mark from the highest point to the lowest point. So from the peak to the trough, all right? So for example, you come up here, you look for the little F, draw Fibonacci retracement. And if you don't have it default on your chart, what you want to do, you want to right click in this zone where you see these other symbols. Just right click, come down to customize, and you will see different things in here. You will find it in here: Fibonacci time zones, Fibonacci fan, Fibonacci arcs, Fibonacci expansion, all kind of different things. You just click on what you want, click on insert, and it pulls it over here to this section. Then you hit close, and it will appear in your options. Okay, you can add things and remove things from there that you use or don't use. All right, that being said, here's how you use it. Again, the basic traditional way of using the Fibonacci: you take the Fibonacci tool and you pull from the top all the way down. Just drag and drop. All right, drag and drop from the top, which is the peak, to the trough. Now, the Fibonacci comes with different pre-existing zones. You've got the 23.6, the 32.8, sorry, 38.2, the 50%, and the 61.8. All right, these are the Fibonacci zones. All right, primarily. Now, the most prominent ones that you want to pay a lot of attention to are the 50% and the 61.8. We call it 61.8, or traders who've been in the game for a while, you're just going to say the 618, right? You know, actually say the 61.8. I might just say the 618. All right. The 618 is known as the golden ratio. The golden ratio. And Fibonacci goes through nature and history as being just one of these phenomena where these numbers just appear in everything, everywhere. Some smart person decided his name was Fibonacci. That was actually his last name. I think it was. Yeah. No, was that his last name? Yeah, that was his last name. And he's kind of figured out these numbers played a part in everything in the universe. So somebody decided, let's apply these numbers to stock trading and market trading and see if they actually have any merit. And lo and behold, they do. All right. So the 618 is very, very key. The 50% also is key, but I would go as far as saying that I like the 38.2 as well. I find that it does play a very strong role and it is very well respected as well. But these two primarily are the main ones. So I want you to pay attention to the rejection and respect given to these zones. We pull from the top to the bottom. All right. Why? If you're trying to mark how far up the price may likely go to, you want to pull from the top, which is the peak, to the bottom, which is the zone. If you're trying to figure out like how far down something may reject to, you want to pull from the lowest peak, sorry, from the trough, all right, to the highest peak. Now obviously you're going to do it within that area of data that you're working with. Okay, you're not going to go on a monthly time frame and do it, because obviously monthly is a huge area of data. But if you're doing it, this is right now what 1 hour time frame we're on. So let me zoom in. So for you guys who are brand new, this might be a little bit more advanced, but if you get what I'm saying, you will get to realize it's actually very, very simple. When I first heard of Fibonacci, I thought Fibonacci was really complex. And then when I really understood it, I was like, this thing is really simple. You just pull from the top to the bottom or pull from the bottom to the top. Drag and drop. So check this out. If I were in this, price is coming down, 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 lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. See, pattern, market structure. All right. And then all of a sudden now price starts to shift, right? So now we're not getting lower highs and lower lows. Market structure has changed everything. We got our, let me zoom in a little bit right there, right? Price came down here. All right. And then we got a huge bullish engulfing candle right here. It engulfs the a couple of candles. Is huge. All right. We got a nice pullback right there. So again, let me just kind of tie everything into what we were doing before. Right, I'm just gonna tie everything into one. So boom. So we know we had a bearish trend. All right, we had a bearish trend that was very clear. We had a channel as well. Boom, 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 boom. Prices bouncing off. Then all of a sudden, market structure changes. No more lower highs and lower lows. We got a huge big sell candle trying to trick you and trap you. Then we got a nice little doji there somewhat. Price starts to reverse. Okay, fine. Then you got 1, 2, 3, 4, 5, 6 candles, all buy candles, all bullish candles right after that. Huge candle here. All right. Once you get a big movement, a couple of things you're looking for. One, if you're looking at the trend line channel, based on that strategy we would have showed you, what you're doing, wait for the breakout. All right. It breaks out, You see it went up here, a nice long wick, it pulls back, you enter that trade, all right? Multiple times through the trade as well, we can see right here. You can see right here, price is bouncing, all right? Different zones, price was bouncing, different zones, price was bouncing. You waited for those breakouts, wait for those number of different times, okay? But let me show you. You draw now, since price is out. All right. So price would have gone up. Price would have, what is this? What did I do here? Okay, right. So price went up. Okay. So this first one is we're going to look at when it's coming, how far down it's going to come. This one over here, we're going to look at how far up it could go. So price came down, price reversed, then we had a bullish movement. It went up to this zone, started to come down. So your question now is, as price is coming down, you see you've got huge bullish engulfing candles, bearish engulfing candles. Question to you is, how far down might this go? What do? You don't know. Take your Fibonacci, you pull from the lowest zone at that point, all right? And you pull it to the highest point, which is this point, okay? You see that? Very easy. Get the tool, right? And you just drag, drop, all right? And I'm just putting it up here so like numbers are not overlapping all over here to the right. Right up here to this point. So all you're doing is you're watching the zones. Do you notice that in that movement up, do you notice how price actually bounced here around the 61.8, broke, came back here to the 50, broke, came back here to the 38.2, touched that zone, broke, came back here and tested and went up, and then it kind of bounced around there. When it broke the 23.6 here, where did it come back down to? This zone, 38.2 again, went back up. All right. So what's happening is you're noticing that it's still rejecting and respecting those zones. 61.8 here again. 50%, look, went up, pulled back, rear to the 50. Went up, pulled back, here, rear to the 38.2. Don't see it as lines, see it as zones. And that is why I actually like to use my rectangle versus lines. Because a line, well, you might look at a line and say, oh, it broke the line, or oh, it got close to the line. Me, I'm like, it's within the zone, within that area is what you want to look for, okay, guys? And by doing this, if you're saying, well, okay, it's likely to probably come down to the 61.8, which is very likely, but look, it means that you could have caught quite a major drop. Quite a major drop from here to here. That's 128, 129 pips. Actually, that was about 130 pips, all right? It came down to the 61.8, didn't break it, didn't stay below it, all right? You wait, and then look, when it comes back, it gives you rejection and bounce. Once it's bouncing off of that 61.8, I'm telling you, gone. And look what happened. Another 200 pips, all right? Now, check this out. Same scenario, but flipped. Price went up to here, all right? Price went up to here. Then it did its thing, it came down to here. So now it started to reverse. Market structure changed. Price is now going up. So what do? You're like, okay, market structure has changed. I wonder how far could this go? You get in your trade, you enter your buy, all right? You got your breakout candle, you got your breakout strategy, you do that, boom, you get in, breakout candle, pull back. If you guys think I'm joking, I don't make this stuff up. Let me show you. Let me zoom in and show you. It plays out the same way every single time. You just gotta wait. Look at this. Price came down, no more lower lows and lower highs. Then what do you get? Bullish engulfing. Then you get the confirmation candle, pull back, buy. Every time. Bullish engulfing candle, all right? Your engulfing candle, your confirmation candle, your pullback, and then buy. Now, why would it pull back there? Well, again, mark your zone out. Mark your zone out. If you do exactly what I showed you a couple times so far, check this out. All right? Price came down. No more lower lows, no more lower highs. So what do? Mark your box. Okay, so what do? You wait for the engulfing candle. Then you've got the breakout candle. Remember? Engulfing candle, breakout candle, pull back into the zone, and then boom, buy. You're in. You into the buy on the close of the sell. Profits. All right? Just like that. So how far could this go? Well, check it. It's already broken in 23.6. It went straight up to 38.2. Like I told you, a very strong point. These are my three favorites. All right. It broke that. Yes, it came back below the 23, but what happened after that? Did it stay below it? No, it didn't. Broke it again. Long wick, right? Nice hammer. Nice long wick. Give you a hammer. Closed above the 23.6 zone. Confirmation candle. All right. All right, again. Think I'm kidding? Watch this now. Price came down. We mark up the box. We can do this all day. Box. All right. Big bull candle. Big bull candle. Confirmation candle. Pull back. Buy. So check what's happening. This, I would not be surprised that this is going to try to get all the way back here to the 50, then the 61.8. Will it go further? I don't know. But at least you'll know these zones very likely is going to try to reach those zones again, all right? So that's pretty much how to use the Fibonacci, guys. Very, very simple. Again, once you practice it, pull from low to top, all right? Low to top, bottom to top, top to bottom. Boom, mark your zones. Mark your zones. Bottom to top, came down. Was this 50%? What did it do? 50%, kept in the zone, retested, buy. Upward trend, you can see the trend. So you're looking for buys, buy. Bop, 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 bop. Pips, right? Pips, pips, pips. Close to 600 pips. Obviously, that was over a period of time. All right. So anyway, as I mentioned, guys, we're over our time. I want to thank you guys for coming on. Any questions before I close off? Anything that you guys want me to quickly recap, or is everybody good? If you guys enjoyed the training for today, drop a, where the sevens, man, drop a 6 in the chat for me. Not 3 6s though, only 2. Drop 2 6s in the chat real quick if you guys enjoyed today's training. Again, it went longer than expected, but it's recorded. Feel free to go over it, review it, watch it, get a feel of things, and use it to your advantage. We can always do another training some other time. We can cover some more stuff, some more strategies, perhaps wall strategy, breakout strategy, EMA strategy. There's a ton of strategies that you could learn. Very, very, very simple. All right. But again, thanks to everyone who came on. Thanks for supporting. Hope you enjoyed it. And yeah, look forward to our next session. All right. So this is CoachVere signing off. Have a great Sunday, guys. I'll see you at market open. For those of you guys who are part of the blue room, of the GhostFX blue room, you know, we're gonna start kicking off signals either from this evening, from tonight, perhaps, maybe from tomorrow, but we'll be talking in there for sure. All right. So have a good one, and I'll see you guys soon. Bye-bye.